Good morning and welcome to Indian Open right here on BloombergQuint Live. I'm Neeraj Shah and let's take stock of how the markets are looking as we build up to the market open in about half an hour's time from now. 45 minutes actually, half an hour for the pre-open. But yeah, the trade bias doesn't seem to be all that bad. Remember, just a recap, last week was a bit of a lackluster week of sorts for the world markets. Everything came off a little bit, about a percent and a half, nothing too bad. So flat, but with a negative close, let me put it that way. But US ended in the positive on Friday's session. Asia starting off positively today. The SGX Nifty has some gains in the session today. So it looks like the start will be positive. The question is, can we build on from there? Because the US futures are trading with a bit of a negative bias. And viewers, keep in mind, you got to keep things in perspective. Last week, while the banks got shattered, Reliance Industries had gained 15%. Now, unless something really dramatically positive comes about, unless there's a valuation-based trade on the upside for the banks and financials, you don't necessarily have banks doing well, but Reliance can only go up as much, right? On announcement, it's gained about 15% in the last week, has gained from about 850, 870 odd all the way to the current rates of 1450 odd. So it's gained quite a bit already. And therefore, you got to keep that in mind that the contributors can only contribute as much in any given trend. So those are a few things that should be at the top of your mind when you're trading or trying to trade the markets today. Now, in a bit, we'll get in Avinash Gorakhshekar with his thoughts on the fundamentals. What we'll try and do is get in Agam to talk about Mindtree. We'll get in Nikki to talk about the stocks in news and then get in our technical experts as well. Mind you, a bunch of other things that you have to monitor in the session, aside of course, the key stocks in news, is what will happen to the currency and a bunch of results that are slated to come out today. The likes of IndianOpen Bank, HDFC Life, Ambuja Cements. All of these are very, very crucial results for more reasons than one. IndianOpen Bank has had a bit of a drubbing in the last few days and weeks and months, and therefore if they come out with a positive set of numbers, you might well have the stock reacting positively. HDFC Life has taken a bit of a beating in Friday's session. The management had told us earlier that the business has come to a grinding halt in coronavirus, but the March quarter will only be impacted for 7 days, and therefore the results could be slightly better than what the street believes, and do be mindful of that. Last but not the least, I would watch out for Ambuja Cements after Icici's display and the stock price performance. Ambuja could well be a stock in focus. Okay, do we have Avinash Gorakhshekar? Then we should try and go to him. Okay, I think we do have him. My producers tell me yes. This would happen, viewers, as I'm anchoring out of home and my production team, the Brave production team, is in office producing this show. But Avinash, thanks so much for taking the time out and joining us. Good morning. What's your sense, Avinash? We've had a massive rally from Reliance already. Do you reckon it can participate more and help the markets, or will it take a breather and therefore the markets too should watch out for that?
Good morning, Neeraj. Neeraj, my sense is after a 15% pop up on the stock in the last 1 week, I think one will possibly see some sort of consolidation now in Reliance. Nevertheless, actual numbers have to improve because, currently market is expecting that this Facebook deal could mean that, debt on the balance sheet could reduce, significantly. Our sense is that numbers could possibly improve only going forward, but in the near term, I think with a 15% pop up, I think it's better to not buy anything fresh at these levels. Our sense is that we could see a little bit of consolidation and a kind of a moderate sell-off. You could possibly see participants from the private sector banks, life insurance companies. Hopefully if these numbers are better than street estimates, you could see a big spike from these counters, and I think the markets could be very well looking at IndianOpen Bank numbers, which are keenly awaited today. What kind of management commentary comes out on the loan book growth, on the asset quality? So I think one could get a pleasant surprise if possibly numbers are better than what the street expects.
Okay, just before we get to numbers, and I think we'll do that in just moments from now, Avinash, but I have to ask you about this pain that all these NBFCs are seeing. Do you think the drubbing has been too severe? I mean, a Bajaj Finance in Friday's session went down to 1975 or thereabouts. Do you think the pain of the near term is in the price, or it'll depend on when the lockdown opens up?
No, I think Neeraj, clearly when the lockdown opens is going to be a crucial factor. Current news reports state that the current lockdown could be further extended by another fortnight, and I think the markets are clearly looking at the fact that until the lockdown is not lifted, it could be impacting Bajaj Finance quite significantly. In fact, the management had gone on record saying that extension of the lockdown would possibly mean a lot of loss of business for them, and over and above, asset quality issues would obviously stand out. So I think we could see a little bit of softness further, but I think overall, we would like to await the Q4 numbers and the management commentary to take a fresh call.
Okay, so well, let's wait and watch what happens here to some of these stocks as well. And I think one, the management con call of Bajaj Finance told us a few things. The other bit is, let's see if the lockdown gets extended in states, in cities like Mumbai and Pune, for example, or some of the other pockets as well. Some confirmations or some ideas of that will come in post the Prime Minister and the Chief Minister call. I think it would be very, very crucial. A lot of states have already sent the murmurs or desires of wanting to extend the lockdown by another couple of weeks. As important as it might be from a health perspective, since we're talking about markets here, it would be disastrous of sorts because businesses stay locked down for another 15 days and then the momentum just accelerates on the downside. So this wouldn't be pretty, but it would be what it would be. So let's wait and watch what happens there, and then we will talk more. Avinash, the other bit is results, and I think before we talk about Mindtree results, just a quick update since you mentioned life insurance companies. What did you make of ICICI Prudential? Because on Friday we had this downtick because of the monthly numbers released and they look very wobbly. ICICI Prudential results for the quarter gone by have been okay, but they have expressed confidence about maintaining their earlier guidance. So therefore, would you be a buyer in ICICI Prudential from a short term or from a long term perspective?
No, I think Neeraj, ICICI Pru reported numbers which were in line with expectations, and I think the management clearly stating that they would be maintaining the guidance gives a great amount of comfort, as far as the long-term prospects of this business is concerned. Our sense is that whatever growth recovery is expected is going to happen post-September. So I think this could be a good opportunity, for investors to chip in for a longer-term kind of positioning in this sector. I would not be surprised that this sector could bounce back equally sharply once normalcy happens. And I think you could see definitely, premiums as well as, the growth momentum coming back again after the second half, after the first half of FY21. So I think maybe the first half could be a little softer on numbers. And obviously, with the lockdown, being extended, if it happens, then I think it's going to slow down the momentum at least in the first half. So I would not be worried in the longer term, but yes, in the short term, the stock could remain a little bit of with a negative kind of bias.
So you would believe that the bias could be negative despite the fact that they have done reasonably okay in the quarter, right?
Yeah, I think in the short term, Neeraj, this fact would remain. But longer term, I would believe that this is a stock where one could obviously start nimbling and accumulate the stock for the longer term, because business model and the longer term prospects of the insurance sector continue to be bright. This is just a hiccup for the next, say, 1 or 2 quarters.
Okay. The other big, a reasonably big development that happened, Avinash, was Apollo Tyres, right? Warburg Pincus converting those convertible preference shares into equity. Now their stake goes up to nearly 40%, pseudo promoter, right? So to say, is this a meaningful shift or event in the lifeline of Apollo? And does it give the minority investor any clue about what to do with this stock if they have it in the portfolio, or if they maybe even want to buy it?
No, I think, Neeraj, as far as tire stocks are concerned, our sense is that despite the fact that crude prices have corrected sharply, and that is definitely a big positive for most of the tire companies, since a large part of their raw material is related to crude. The overall headwinds in the automobile market are not positive at all, and I would not be surprised that at least for the next 1 or 2 quarters, recovery looks to be a bit tough, because Apollo Tyres is a very large player to OEM players in the commercial vehicle, in the passenger car space. They have a large replacement market share also. So I think unless and until we see some positive, sentiments in the automotive market, which unlikely going to happen in the near term, I would believe it would be a market performer. But yes, probably FY22 could be a lot better, but FY21 is going to be a lot challenging. So I would not be in a hurry to buy the stock. I would prefer to wait for further news flows from the large automobile players, and only once positive recovery happens, then I think you could see all these tire companies actually getting re-rated again.
Hmm. Okay, viewers, also keep in mind that for a lot of these tire companies, yes, while the business updates from across the world would be important, and we know what happened to Motherson Sumi, um, the stock, when the updates from China and some of the other areas came up well. Apollo has some exports, but some of it, if unless I'm very wrong, is also to the LATAM areas where there is no clarity. And therefore, you got to be mindful of the fact that what happened in Motherson may not necessarily happen in Apollo. The business dynamics are different. The products are very, very different. And therefore, you have to be mindful of that. Just that, yeah, 40% stake with BloombergQuint is it's an interesting development for sure. But Avinash's view is well taken. Okay, let's get in Agam Vakil, who joins in now with a perspective on Mindtree, because there we have some information and some guidance given about what they did in the quarter gone by and what they could do going ahead. Agam, good morning. What do you have for us?
Good morning, Neeraj. Well, unlike the other IT companies, Mindtree has actually done quite well in the quarter gone by. We've seen an over 4% growth sequentially in revenue and about a 4.5% growth in profitability as well. And this was against expectations of a little bit of a decline. So when it comes to revenue, that's largely in line with expectations, profits slightly higher with margins being maintained. What really stands out for Mindtree in this particular quarter is the fact that the COVID has not had as much of a disruptive impact on its business as much as other companies. The company has said that it's gotten to 99.5% of its workforce to work from home, which is a big positive. Besides that, they are seeing a significant increase in deals. So the new deal signed stands at around $393 million as against a number which was below $300 million at the end of the third quarter. So it seems that not much has impacted Mindtree. And once again, going forward as well, the management remains fairly constructive on how things are, especially when it comes to the supply side of things, considering they have seen no disruption. When it comes to demand, on the other hand, the management does say that there could be some amount of weakness in the near term, but with the kind of deals book they have right now, they are good to go for about 2020.
Okay, Agam, what have brokerages said by and large for Mindtree?
Well, by and large, they all remain positive. They have maintained their positive stance, and they are once again very constructive as far as Mindtree is concerned. Once again, it all will come down to the outlook. But we must remember, Neeraj, that Mindtree is one of those stocks which has had an outperformance when it comes to year-to-date as compared to its peers. And to quite an extent, a lot of these positives have already been factored into the price. But that said, it's still certainly one of the best in terms of the numbers that have come out so far.
Okay. Thanks, Agam, for putting that into perspective. So that's as far as Mindtree goes. I was just trying to pull out a note or two. So, for example, Macquarie, they believe that the higher exposure to travel and hospitality may hurt a bit. They have done a 9 to 22% cut in FY21 and FY22 EPS. They've lowered the target price by 9% to 670. So that's Macquarie. On Mindtree, and I think MK believes that the margin performance is strong, but growth is lopsided, so on and so forth. They've raised the FY21, FY22 on higher margin confidence as well, but they've maintained the sell. Avinash, if you had Mindtree, if somebody has Mindtree in the portfolio, what should he or she do?
No, I think, Neeraj, looking at the numbers and the kind of outperformance, both in terms of top line as well as profitability, and listening to the management con call, I think one thing is very clear that, downside for this stock is well protected. I would believe that, obviously, fresh buying would not be advised. But definitely, if at all the COVID-19, extended lockdown continues, then it could have some dampening effect on their travel and hospitality kind of verticals. But overall, I would believe that this could be at best a market performer. Markets are not going to re-rate this stock at least in the near term. But yes, hopefully post September, one could definitely see better improvement in the margins and the outlook. So I would believe it's a hold. I would not be buying fresh at these levels.
Okay. Avinash, stay on. Let's get in our technical experts and derivative experts on board to try and figure out what to do in a scenario like this. Ashish Chaturmoda and Ruchi Jain join in with their thoughts. Gentlemen, both of you, good morning. Thanks for joining in. Ashish, let's start off with you. What's your approach to the index today? We may start off higher. What should a trader do in that scenario on the Nifty or the Nifty Bank?
Hi, good morning, Neeraj. So I think, see, broadly, if you look at on the trading session, although Nifty saw a correction of 1.7%, but if you look at the major contribution came from Reliance. Excluding Reliance, if you look at the performance, it was almost 2.8% down. And that shows that there was a broad-based rally, and particularly in the I think we need a very strong breakout, and that breakout comes to close to around 9300 kind of zone. Until 9280, 9300 is not breached, I think it's going to be a consolidation phase between 9050 to 9300. Typically, I don't see any major, trading activity getting witnessed between 9050 to 9300. But once we see a decisive breakout about 9300, that's the point where a lot of shorts will start covering their position, because that's where a lot of calls have been written between 9300 and 9400 strike calls, and at the same time 9000 puts have been written. So I think broadly 9050 to 9300 is a broad range for the market, and unless we don't see a decisive breakout on either side, one should avoid any kind of heavy index trading at this juncture.
Okay. Ruchit, good morning. Are you trading the index today, Nifty or Nifty Bank?
Yeah, hi, very good morning, Neeraj. Well, Neeraj, if you look at Nifty chart, then last I think 7 or 8 trading sessions, we have seen some consolidation within the range of 8,900 to 9,000 on the lower side, and 9,300 to 9,400 range on the higher side. And also on the daily chart, there is a formation of a rising wedge pattern. Usually, whenever you see the prices approaching the apex end of the wedge, there is a consolidation followed by a breakout. So I think maybe next 2 or 3 trading sessions max, we would see a breakout in either of the directions. So rather than preempting any directional breakout over here, I would say that keep a sell order below 8,900 on the Nifty, or a buy order above 9,350 on the Nifty. Whichever side the breakout comes, there would be a directional move post the breakout. Even if you look at the options data, in this monthly expiry, the 9,000 put option has very good amount of open interest outstanding over there. So I think even as per the options data, 9,000 is a support for the market. So I would say that in case if any existing long positions are there in the Nifty, they should continue to hold on with a stop loss below 8,900. And if any existing, any fresh positions have to be created, then wait for a breakout either below 8,900, breakdown below 8,900, or a breakout above 8,350.
Okay, so in light of that, what are specific stocks to be traded? Ashish Chaturmoda, what are your trading ideas today?
Yeah. So Neeraj, here I think the one sector which is looking very promising and where the trend is clearly visible is the pharma basket. And within that, every day we are witnessing that some of the other stock is contributing very well. So now I think the stock which I am liking within this basket is Cipla. This stock on the daily chart has formed a pole and flag formation, and on Friday's trading session there was an increased volume activity, so almost higher than 50% than the Thursday's volume activity. And in terms of price activity, stock has closed at 3-day high, so which clearly indicates that this pole and flag formation is about to see a breakout. Keeping that in mind, 585 would be my trading stop loss. On upside, 635 is the immediate short-term target in Cipla. Second, I would come to Biocon, again the stock which is witnessing a very, very strong OI build-up, and again on Friday's trading session we have seen a very strong recovery from the lower end of the channel. So I think this stock could be initiated as a buy idea. 346 would be my trading stop loss. 380 is a short-term target in Biocon. And on short side, I think UPL is one stock which is continuously showing a lot of weakness. On the weekly chart, it closed at the lowest point of the week. So I think that's giving a sense that the follow-up selling activity could be witnessed in the stock. 344 would be my trading stop loss for going short into UPL. On downside, 318 is a short-term downside target one can expect in the stock.
What about you, Ruchit?
Well, even I have a couple of buy recommendations from the pharma space since this sector itself is buzzing and we have seen a good amount of outperformance even when the markets were correcting. Cadila Healthcare is my first buy recommendation. After a sharp up move, we have seen some consolidation since last couple of weeks. This has led to formation of a bullish flag pattern on the daily chart. Prices are trading near the 38.2% retracement support of the recent up move. So, the risk-reward ratio is quite favorable to create fresh longs over here. A stop below 325, one can buy for near-term target of 360. And one of the mid-cap pharma name, Ipca Lab, we have seen price move supported by very good volumes in the recent past as well. The stock is, on the daily chart, it seems that the stock is likely to resume its uptrend. So, keeping a stop below 1540, Ipca Lab is a buy with for target of 1730.
Okay. Now, viewers, keep in mind one more update. That pharma companies have a bit of a fundamental small cloud to themselves. So technically, Ipca Labs may look like a buy and it could well turn out to be that. But Avinash Gorakhshekar, I want you to come in and tell us if you believe there could be an impact fundamentally on the likes of Cadila and Ipca because of the US FDA advisory issued on Friday against hydrochloroquine.
I think, Neeraj, this is going to be definitely be a sentimentally a negative news flow, at least in the near term, considering the fact that Ipca and Cadila are key players in this pharmaceutical product. Our sense is that fundamentally, Ipca continues to show very strong numbers, and I think the fourth quarter numbers are going to be extremely solid. How the business pans out for the next year is going to be entirely dependent on how consuming markets develop. But overall, I would believe that more than Cadila, I am extremely positive on Ipca Laboratories, considering the fact that they have a good blend of domestic and US markets for almost 200 to 300 branded formulations. So I would believe that if at all the stock prices do correct, Neeraj, for Ipca, I think it would be a good opportunity to accumulate the stock. Yes, there could be a little bit of softening considering this negative news flow which has happened, in the previous week. But this could be a good opportunity to accumulate Ipca.
Okay. By the way, viewers, I just want to read out a note that Jeffries has put out today. You got to be mindful of that as well. They're saying that FDA reiterates the caution on hydroxychloroquine, which is a negative, but the trial data is the key. Now, the only caution that they've given out is that this hydroxychloroquine or HCQS has multiple generics approved in the US. The key suppliers are Cadila, Teva, Sandoz, Sun, Dr. Reddy's, and Cadila commands a 30% market share. Ipca is a key manufacturer with one of the largest supplies, which is now online. And because both of these stocks have rallied on expectations of gains, these could be at risk given the advisory from the US FDA. So there is a short-term risk to this, but on the charts, because of the run-up, the stocks still appear bullish. And on Ipca, so Ruchit has given a buy call on Ipca. Avinash is bullish on Ipca from the long-term perspective as well, but be mindful of this short-term issue that I spoke about. The other stock in focus, and I want both a chart check as well as a fundamental check, is on Cummins India. Now, Aman's in the con call, it's a mixed con call, but some negatives out there. They have said that the management believes that the recovery will be 6 to 12 months away, and multiple segments are severely affected by the resultant economic slowdown. Ruchit, first a chart check on Cummins India. The last few days, it's had a tough time too and has bounced back too. What is your call on Cummins?
So technically, if you look at the weekly chart, then there is still a low top, low bottom formation, and the recent up move that was about from the low of around 280 to 430, just as of now seem to be a pullback move. It has retraced about 38.2%, and if you look on Friday session, the stock seemed to have resumed some good amount, decent amount of correction. So I think technically it's not an uptrend. It was just a pullback move. 425, 430 continues to be a resistance. So one should avoid taking fresh longs over here. We could see another dip again towards 320, 325.
I'm actually asking if you would initiate a short position on this one, Ruchit, today.
Yes, in fact, no one can initiate fresh short positions if we get around 398, 400 range. If markets are showing some move, and if we get some amount of pullback move towards 398, one can go short over there, keeping a stop loss above 430 for target around 325 in near term.
Avinash, what's your fundamental call on Cummins after the update that they've given?
No, I think Neeraj, clearly, this is one company where our sense is also that over the next 6 to 12 months, one is likely to see significant underperformance. In fact, post the Q3 numbers, the management had reduced its export guidance. And I think exports are going to be badly hit. The domestic business also continues to face challenging headwinds. And, unless macro recovery does not happen, we are unlikely to see any kind of positive commentary from the management. So I would believe that, even at these levels, there could be a little bit of sell-off once the Q4 numbers are announced and the management commentary is put out. I think nothing great on the horizon, at least for the next 6 to 12 months. So I would avoid it at the current odd levels.
So Avinash would avoid it. Avinash, if you had it in your portfolio, would you get out of it?
Yeah, I think Neeraj, clearly, I would not be surprised that I would definitely get out, and I would possibly look at some other sectors where possibly the risk reward is better. Frankly, at these levels there is some further downside left. Although the stock has corrected sharply, earnings recovery is going to take a very long time. Maybe for the next 12 to 15 months, we could see a kind of negative growth as far as EPS growth is concerned.
Okay, now IIFL came out with a note and on the liquor space, they have built in a 10% sales decline and flattish EBITDA in Q4 for United Spirits. That's a steep one for Q4 for United Spirits. This is on the back of also the fact that Pernod Ricard saw India Ops saw 7% decline in the quarter ended March 2020 as the lockdown in March weighed in on growth. And now viewers, think of it this way: if a 7-day lockdown or an 8-day lockdown for the month of March led to a 7% decline in the quarter for Pernod Ricard and could lead to about a 10% sales decline for United Spirits, what would a 30-day or a 45-day lockdown do? That's the key that you got to monitor in the session today. So do watch out for this stock, which is United Spirits. Just wondering on the charts, Ashish Chaturmota, United Spirits.
Yeah, so Neeraj, if you look at on the, for a longer term chart, that is getting reflected into the price pattern as well. We saw a decline from 740 to almost 440, and there was some recovery on the hope that some of the liquor shops might open, and that led to some kind of recovery. But eventually in the last 2 weeks, I think that weakness has started persisting in the stock, and now it's trading below 540, 550, which was an important resistance point. So for me, it's in a range, and that range is between 500 to 550. It's near the lower end of the range. So I think if 500 gets broken down on downside, then that's the point where you will see a lot of weakness started in the stock. So let's keep 500 as your stop loss for any kind of long positions if someone is holding, because once it breaks 500, then I think the stock has a potential to see 440, 450 kind of levels on downside.
Okay. Well, a minute and a half left. Actually, Ruchit, very quickly on United Breweries or United Spirits, your thoughts too.
I think amongst both the stocks, United Breweries, the trend is clearly negative. United Spirits is more into a consolidation phase, but United Breweries, last couple of trading sessions, we have seen an increase in volume along with the price decline. Also, the 20 days exponential moving average is acting as a resistance. Any pullback moves towards 900 should be used as a shorting opportunity, keeping stop loss about 924. I am expecting targets near to 830, 840 in UBL.
Okay, gentlemen, well, everybody's negative on the alcohol companies. Let's stay on. We'll want to talk a bit more about some of the other newsmakers, and steel is something that we haven't discussed as yet. But the market's about to kickstart the pre-open session. Remember, the SGX Nifty is already showing its sign in the green. The point is all the newsmakers are giving some negative news flow. So it'll be interesting to see how some of those usual suspects start off in the session today. Keep an eye out on the currency as well. Weekend and Friday session. It'll be interesting to see what happens there too. But the first trades on the pre-open session about to start. We might have a positive read for the markets. It'll be interesting to see what the financials do as well. The first rates about 1% for the Sensex, about 1% for the Nifty as well. So not a bad start. Let's get in what's moving and what's not. I don't think we'll have a 10% uptick on State Bank of India. Let's give that a pass. Maybe IndusInd Bank ahead of the numbers could be active. Let's wait and watch. The rumor on the street is that the numbers might be good. Let's wait and watch. HDFC Bank 954 could be interesting. I'm interested in watching what a Bajaj Finance does in the session today after the drubbing that it got the other day. For now, it looks like it'll start off positively. Let's wait and watch. But these are early days. Let's give these rates a chance to settle down before we talk more about them. Bharti Airtel is the other big one that I would monitor personally. What about some of the newsmakers? Just very quickly, just see what some of the pre-open session stocks are doing before we'll just mark them cursory. Aarti Industries gave a very strong business update. Let's see if that reacts. Cummins India for now looks like starting off in the green. Icici Prudential reaction to the numbers, about 3% in the green maybe. And Tech Mahindra, there's a report which says that AT&T might continue to be on the digital path, which might augur well. Let's wait and watch. Ipca Labs though starts off negatively. Cadila starts off 10% lower in the pre-open session. So both Ipca and Cadila starting off negatively. Cummins for now doing okay for itself. Okay, we'll revisit these rates in a moment, in few bits from now, and then talk more. So, Ashish, come in because we haven't spoken about these pharma names with you. What if Cadila or Ipca start off lower? Would you trade them, very strong stocks, would you trade them on the downside?
So Neeraj, because of this news flow which is regarding to this particular medicine, I think there can be some immediate pressure in names where they have a very high exposure. So maybe Ipca, Cadila, they might see some correction, but the broad trend is promising. But as you asked me, what should be the strategy on downside? So I'll wait and I'll see how this prices get stabilized at lower levels. So we need really a strong volume activity on the recovery as well to really initiate any kind of long trade. Just because they will correct 5% and we start taking a bet, that will not be the case. So we'll see how post-reaction, how the recovery comes into play, and that's where we are going to take a fresh call. But I think I'll stick to names like Cipla and Biocon, where I think the trend is much stronger, and I don't think the news is going to impact these names.
Okay. ICICI Pru looks like starting off okay, so let's wait and watch what happens there. Mind you, these are some of the newsmakers that you have to keep in mind. Tata Steel, in fact, starts off positively. So, well, maybe the small risk on that we're seeing in the markets on open might lead to some of these stocks to well. Let's wait and watch what happens during the course of the day. In the first 3 minutes, almost all the stocks in the pre-open session are doing okay for themselves. Axis Bank numbers come out tomorrow, IndusInd Bank today. Ashish, do you have any hopes from either of these two names?
So I think IndusInd, I'm a little negative. In fact, if due to any reason, if the stock opens higher, then also it's a case for selling at higher levels. But in fact, the way the weekly charts are panning out, it looks like once the stock breaks 370, we are headed for much bigger downside. So maybe again the stock has a potential to see sub 320, 310 kind of levels in days to come. So clearly a weak candidate. So I think IndusInd Bank definitely is a stock which, if either sees a recovery, is a short sell on rallies. If it's breaking 370, again a stock which one should add as a short candidate on weakness. As far as Axis is concerned, I think here, I would see that how the stock pans out, because around 385, 390, there is a reasonable support, and I want to see how the stock breaks the 385, 390 zone. If it breaks with a very, very strong volume on downside 385, then that's a sign of concern even for Axis Bank.
What about you, Avinash Gorakhshekar? Any view on IndusInd? I mean, can the bank surprise? And if it gives out a positive surprise, do you think there will be buying here?
I think, Neeraj, the propensity to get a positive surprise this time looks pretty remote, considering the fact that, the CV business and the MFI business are going to be definitely pain points in the near term. The management had already hinted about asset quality issues in the third quarter conference call. And I think more than the profitability of this quarter, I think what could be the outlook of the management going forward, and typically in terms of the asset quality, in terms of the loan book growth, and especially on the CV business and the MFI business would be, key factors to watch. So I would not be too keen to buy, the stock ahead of the results. Would better wait for the management commentary and some more clarity once the con call happens today.
Okay, the other thing is what would happen to, let's say, names like Cipla, and Ruchit, come in here. the derivatives data as well as the charts, what do they indicate for Cipla?
The charts after a sharp up move, in the second half of April, we have seen some consolidation in the stock, but the overall trend still continues to positive. Any move above 607, 608 would lead to a resumption of the uptrend towards 650, 660. So I think if one has to take a trade, 610 would be the crucial level. One can initiate fresh longs on a breakout above 610 with a then stop loss below 583.
If ICICI Prudential, Ruchit, starts off the way it is showing, which is about a 2% up move, can it do more? Because there was a piling of shorts in that stock in Friday's session.
See, last few days the prices have been trading in a channel, and the support end of the channel is 329. But if we look at for any short covering move, the stock has to first move about 357 kind of level. Then only I think one should expect some short covering move. So I think it's very difficult to take a trade as of now, even if it opens at those levels. But yes, if it moves above 357, then one can take a fresh look for some short covering move.
It looks like a good start for the markets. The pre-open session about to settle down, and we have all the Nifty 50 stocks in the green. So that's not a bad thing at all. Reliance Industries is starting off well. Looks like starting off well, let me put it that way. Another 1.5% or thereabouts, 14.20, 14.30. Avinash, now that you might have got the weekend also to analyze the news flow better, is Reliance Industries worth a portfolio addition at these valuations?
I think, Neeraj, as I mentioned earlier, we believe that Reliance definitely is a good long-term portfolio addition. I would personally believe that, I would wait for a minor correction to enter in. The bigger plus for Reliance is that, the Jio business is going to be a key driver for their revenue and profitability going forward. And I think hopefully, once the debt on the balance sheet gets, reduced, hopefully in the next 3 to 6 months, you could possibly see a good amount of re-rating further. But at these levels, we have been telling our clients to hold on. We have been buyers in the stock at lower levels, and our sense is, the stock would consolidate. After a 15% pop-up last week, for a large cap stock like Reliance, I think it makes sense to wait for some time and probably enter into the stock at some minor correction. And then, obviously we expect a decent risk reward over the next 12 to 18 months.
Okay, some mid caps at the end of the pre-open session which seem to be doing well. Let me just quickly mark them. Sangi shows a start of some 17%, Saregama India about 11%, Jamna Auto about 8.5%. There is HOEC which is up about 8%. So do watch out for some of those small cap names as well. They could be interesting movers. Vimta Labs is up about 7.5 to 8%, and Symphony is showing some gains for itself as well. So good start to all of those names. Winter the Organics 2.5. RT Industries hasn't budged too much, so that might be an interesting one. Avinash, I think did we speak about RT? If we have, then leave it. But otherwise, if we haven't, did you have a chance to look at the business update?
Yeah, I think, Neeraj, our sense is that Aarti Industries is one of the largest specialty chemical players. And I think, considering the fact that, their global customers are definitely facing challenging headwinds, possibly for the next 1 or 2 quarters, Neeraj, one could see a little bit of hiccup. But we are positive on the company over the longer term. In fact, on the entire specialty chemical space, we believe that post-September, I think things should be back to normal. And I think, this time, these companies could perform much better than the previous year, considering the fact that supply shortages are definitely going to make prices move up further, and I think margins could definitely get better. So we believe we are positive on the stock, but yes, in the near term the stock could be volatile.
Okay, Avinash, just a follow-up. Steel companies, and from the POSCO results, there was some negative read-through, right? I mean, the management expects challenges. They have trimmed the calendar year revenue and shipments guidance as well. Nomura sees the next quarter to be weighed down by lower steel prices and volumes, and what impacts POSCO might well impact the Indian steel makers as well. What do you do with the Tata Steel, JSW, JSPL?
I think, Neeraj, I would avoid this sector for the time being, considering the fact that this is a fairly highly leveraged sector, and I think demand has contracted significantly post the lockdown. Production is also down, and I think as far as Tata Steel is concerned, our sense is that they have a large exposure in Europe, and unless and until some package is given to them, it's going to be a difficult situation for them to manage the debt on the balance sheet. So I would not be surprised that possibly Tata Steel could record a huge loss in the coming fourth quarter. And I think the outlook and commentary for the coming year is going to be extremely important, which at this point of time looks a little uncertain.
Okay, well, we are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, steady quarter for Mindtree with 4.3% sequential growth in revenue. The company also saw little disruption caused by the coronavirus outbreak. But it was a weak quarter for ICICI Prudential Life Insurance, posting a 5% growth in gross premium with profit after taxes falling 31% year on year. It's going to be an earnings heavy day with IndusInd Bank, HDFC Life, Ambuja Cements and Adani Power coming out with their numbers. Warburg Pincus has converted some of its convertible preference shares in Apollo Tyres into stake, now holds more than 40% in the company. And Cummins India makes it clear that the recovery will be stretched out over a 6 to 12 month period, and that is quite stunning. Actually, we spoke about Cummins India fundamentally. You know, there's something that was very, very interesting, which I thought was very, very interesting. Let me put it that way. I just want to read it out. There's a Motilal Oswal research on Cummins, and they say that the profit after tax for Cummins has grown just 4% in the past decade. Other income has risen at a CAGR of 16%, and other income now forms more than 30% of profit before tax. Can you believe it? It's other income which is playing such a big, large part to Cummins India business. And well, that tells you a story or two about what's been the case, a scheme of things for the last few days, weeks, months, years maybe. Technically, Ashish Chaturmurthy, Cummins India, maybe we spoke about it, but now that the pre-open rates have settled, I would want to know what you think about it. It's starting off just about 0.77% lower.
So I think, see, Manier, very, very weak structural trend. If you look at post, hitting at all-time high in 2015, now it is a continuous, 5-year journey where the stock is continuously making a lower top, lower bottom formation. In fact, recently it had broken 2014 lows, and we are still trading below 2014 lows. So that's a sign of the weakness the stock is showing. There was some positive up move which we saw from a recent close of 280 to almost 420. But I think on the Friday's trading session there was a dip of almost 8%, and I think that dip might continue for a while. I think the stock has a potential to see 330, 340 kind of levels in an immediate short term on downside. You were asking regarding a long-term shareholder. So I think anyways they have not made any money in last 5 years, and the probability of any kind of money being made in next 6 to 9 months looks very, very difficult. So maybe even if it makes a bottom, it is taking to see a long consolidation before seeing any meaningful recovery. So there are multiple opportunities which are available in the market at this point of time. One should try those kind of stocks to make really good amount of gains rather than sticking to Cummins India.
Okay, then let's try and do this. Let's try and take one top call from both our experts, maybe slightly early, but it's important since we are kind of in that flow. Ashish, since there are multiple opportunities, what's the best intraday or a very short-term trading opportunity according to you? Your top call.
I'll go with Cipla. I think here the pattern is very clear. 584 would be my trading stop loss for going long into Cipla. On upside, I'm looking for 630, 640 on an immediate basis. Even on a medium to long term, this looks promising because the stock has crossed last year's high and it is into a consolidation for last 5 years. So I think any decisive breakout, even beyond 630, 640 is going to open ways for further upside. But yes, in an immediate short term, 635, 640 is what one can look for as a trader.
Okay, Ruchit, your top call for the day today.
Well, another pharma name I would pick that is Granules. One can clearly see a high top, high bottom structure. On Friday's trading session, the stock again witnessed good amount of volumes from its price support around 20 days exponential moving average. So Granules one can buy from a short-term perspective, keeping stop below 162, expecting target somewhere around previous highs of 190.
Okay, we will watch out for these names. We are about 10 seconds away from market open. So let's see how we start off in the session today. Well, the first rates positive, about 1%. We are holding on. The Bank Nifty contributing. and we're actually building on a little bit. Let's see if these gains last or do we buckle down. 1.5%, 1.3% now, 1.4% for the indices. What's leading the pack? Banks. IndusInd Bank ahead of the numbers, 3.5%. There is strength in HDFC, about a couple of percentage points. Kotak Bank, about a couple of percentage points. So it's not a bad start, I must say. Hindalco, Bharti Infratel, Tata Motors, Tata Steel are some of the others that are doing well. Z Entertainment, of course, is the top gainer. What is not doing well? Wipro, marginally lower. HCL Tech, just about flattish in trade. Bajaj Finance, hardly holding on to gains, just about 1%, 1996 or thereabouts. So no big shakes out there for that one either, even though the Bank Nifty is doing largely okay for itself. What about the broader end of the spectrum? Let's move on, because while the indices are doing well and all three are doing well, let's see what's happening at the mid-cap end of the market. The losers first, IPCA 4.5% lower. This is what I was worried about, viewers. Cadila is down about 1%. No, actually just less than 1%, but Cadila is down too. So be mindful of that. What is doing well? Rallis up about 8%. Syngene 327 up about 7%. Oberoi Realty bounces back up at the 12% gash. ICICI Prudential 6% higher, 356. Remarkable pullback. Let's wait and watch if the longs get cut off now, or this might be actually a part of that. But do watch out for ICICI Prudential, 357 or 358 and counting. This is the level that Ruchit said would be the interesting level to monitor. So do watch out for these names as well. And last but not the least, just want to mark a couple of stocks which are in focus. Actually, Bajaj Finance is now at 2009, so picks up about 1.5%. Cummins about 2.8% lower. Deepak Nitrite bounces back, and Vinati Organics is up about a couple of percentage points. So those are a few names that you need to monitor in the session today. Quick opening thoughts. You've given us your top trades, but the index is up 1.7%. Ashish Chatumuda, quick thoughts.
Yeah, so it is approaching that important resistance point, but the way this is open, it looks like there is a possibility we are going to see this breakout sustaining above 9,300. So keeping that in mind, I think today's low would be critical. Keep that as a trading stop loss. 92.30 Nifty future should be the trading stop loss for going long. Can initiate a long position, a partial long position at current levels. And once you see a breakout sustaining above 9,300, that's the time you need to add more positions into your index trading. Once it crosses 9,300, I think on upside 94.50, 9,500 becomes an immediate short-term target in Nifty. And as we discussed about Cipla, this is one stock which is seeing a massive breakout on the weekly chart. So here also, I think I would like to revise my stop loss from 585 to 600. And with a fresh stop loss, I think stock has a potential to see 640 as an immediate short-term target.
Richard, what about you? Your opening thoughts?
Here the opening looks positive, but again, as we said earlier, that 9,300, 9,350 is the range where we have seen resistance in the recent past as well. So it would be crucial that how the index behaves today. Possibly in the second half would be more crucial today. In case if we see a breakout above 9,350, then one can enter fresh longs on the index as well. But as of now, I would recommend to take more of a stock-specific strategy over here.
Gentlemen, we leave it. Thanks so much for giving us your perspective. Really appreciate your time. Just one quick additional perspective from you, Avinash Gorakhshekar. Because ICICI Prudential is starting off so strong, would you be tempted to buy into HDFC Life or SBI Life?
No, I think our preference would be SBI Life and then HDFC Life, Neeraj. We have been quite positive on SBI Life, and our sense is that, leaving alone maybe the fourth quarter numbers and the first half of September, I would believe that, recovery in this sector looks quite well poised beyond September. So I think these are stocks which should be, accumulated on every decline. But yes, SBI Life around 700 odd rupees definitely could qualify as a good risk reward bet, for investors who want to take a long shot in this sector.
Well, thanks a lot for that, Avinash Gorakhshekar. Appreciate your time. Well, banks it is that are ruling the roost. It's very interesting that whenever we talk to Chakri Lokapriya, financials are in news for one reason or the other. Chakri, so good having you. Thanks for taking the time out. Neeraj here, good morning. What's your sense, Chakri? We've kind of throwing caution to the winds of sorts in the last few days, even though the last week was flattish. There were more gains than losses, and we're building on from there. What's your sense on the markets?
Good morning. Thanks for having me. Yes, indeed, banks are continue to remain a favorite. We will simply because today the narrative is changed in terms of it's all about valuations. Now, even if you assume loan growth to fall down to very low levels, to the very low single-digit levels for the next couple of years, and assuming that the GNPAs spike from here for the next 3 quarters, even if they go up by about 30–40%. Adjusting for that, the valuations on a price to book for companies is still looking attractive, given that growth at some point in maybe a FY22 and beyond will come back. And you have many of the NBFCs today trading at very reasonable valuations after a long time. And of course, frontline banks are also attractive.
Some results are going to come out today, Chakri. IndusInd Bank, Axis, if indeed, I'm just wondering, if indeed the quarter four numbers delivery is slightly better than what the brokerages have penciled in, do you reckon that there could be a positive move, or would the markets, or should the markets largely discount quarter four as things gone by? What will happen ahead is probably completely different from what has happened in quarter four.
There will be a certain amount of confusion in terms of the numbers, simply because even if you look at the quarter just concluded on 31st March, it was business as usual until about the third week of March. That's when the lockdown came in. And it's only post that, so which means largely the quarter, for the whole quarter, would have behaved the way it would have anyway, with or without Corona. So the Corona impact is for the fourth quarter is just the last maybe 10 days or so. And then now going into the first quarter of this year, April clearly has been a kind of a lockdown situation, and May will partly reflect that as well. So, the reflection of the just concluded quarter's results is not a reflection of what is likely to happen over the next 2 quarters, and next 2 quarters are likely to show worse off results than what has just happened in the last 2 quarters.
Okay. Well, Chakri, there is a lot of confusion about the kind of news flow coming out from the insurance companies, isn't it? I mean, Friday we had this updates from those insurance companies, and they didn't seem to be too positive. The numbers from ICICI Prudential looking rock solid, and the stock is reacting very, very positively. Maybe some bit of short covering as well, but you have to admit that the management to express some confidence. What's happening here?
Yeah, I think again, this is also a sector which will reflect a fair degree of confusion. There will be some stoppages of policies without a doubt, and some of the management caution is probably reflecting that. And this quarter, in this current time period, there has been a lot of anxiety among employees about their job outlook and their job safety. And so some of the policies which they were taken at their own discretion, they will try and cut back expenses, and that's partly being reflected. But the stock's reaction reflects that when all this dust settles, then life will be hopefully back to normal, and I think that is what the stock reactions are showing.
Would you be a buyer in the insurance place?
Insurance, I think I'll stay back a little bit, simply because the valuations, while okay, I think they're not cheap enough. In frontline banks and frontline NBFCs, on the other hand, in the financial services space, the valuations are looking good, recognizing that they'll be hugely volatile because the next 2 quarters are likely to show fairly bad results.
Okay. That aside, Chakri, we got some very positive commentaries from some of the specialty companies, Aarti Indus growth numbers, etc., and all of that. These are not stocks that have corrected now. I mean, they've recovered a bit, so and now they're not too far away from their all-time highs also, but they're expressing confidence. Should one buy into them?
I think yes, one should buy, and in fact, we are buyers. And all the names that you mentioned, Aarti Industries, Sudarshan Chemical, all these companies are leaders in their own segments. These are companies which already have a fair degree of export revenue. So they know how to work the supply chains outside India. There has been disruption for well-known reasons because of Corona and an increasing a move by companies to diversify away from one country, China, to other countries. And from Aarti Industries, Sudarshan Chemicals, all these companies are well positioned to gain from that disruption. And these companies, will gain from a higher volume. And these are not high margin companies, but the volume wise, I think they'll gain a lot. And in terms of the next 3-4 year growth rate projections, and also importantly, I think in a low oil price environment, at least for the next couple of years, some of their input costs, which related input costs, have also come down and will stay low for the next couple of years. So yes, these two are good enough reasons. With top line accelerating, a moderation in the costs should help the stock performance.
Okay, that's one more point. Now, Chakri, are you wary of making large fresh investments in pharma because of the run-up and the manic run-up that these stocks have shown already?
Good question. These sectors have underperformed. There, it's clearly a stock-by-stock approach. For instance, Glenmark is up about nearly 40-50%. But even after all that, its valuation is still trading at under 10 times FY22. Now, that is a fairly low multiple for a company whose earnings growth is fairly visible over the next couple of years. Yes, Glenmark has had some amount of execution issues. So even though the stock has run up 40-50%, there's still adequate room in terms of valuation. Now, the same story can repeat itself against various other companies. Jubilant is another example. And you have numerous examples over there. And so the valuations are not expensive in spite of the run-up in some of the names. And we would continue to buy because, mind you, as you go into next year, about 6-8 months down the road, there will be a need for huge amount, a therapeutic need for various kinds of treatment for corona, because corona as a disease is not going away. It's just that the vaccine and therapeutic treatment will become the norm. And at that point, a few billion doses will be needed some 6-8 months down the road as a preventive, as a therapeutic in various categories. And all these companies across board will benefit with the ongoing work that they're doing in this, in finding some kind of a preventive or a combination therapy to corona.
Okay, so, well, that's the other thing to monitor. Chakri, I'm wondering, where is it that you have the confidence of putting in big money to work? If you
think
putting big money to work right now.
Yeah, I think it has to be an incremental approach. I would think, simply because it's not that everything is done and dusted and we all go higher from here. This is going to be a market over the next several months, which will see a huge amount of volatility, but hopefully that volatility will be on the way up. And so staggering investments is clearly, I would think, the way to go. And where would we put the money to work is clearly here at this point is more bottom-up picking, because individual stocks are down dramatically. But if you have to look at space, yes, autos as a space, whether you look at Hero Moto or Maruti, these are companies which are reflecting hardly any growth for the current valuations. That is, if you look, if you do an implied, what does the price imply? It's implying hardly any growth over the next 7 or 8 years. Now, that is an unrealistic assumption. So, these companies will at least grow, if not in line with GDP, slightly lower than GDP. And so, yes, so their autos as a sector looks good. NBFCs, there have been various worries. Take Frontline, whether it is Cholamandalam or Mahindra Finance, worries about, what happens to their GNPAs. But their valuations will kind of reflect that. So incrementally, we will nibble at these names, and I think that's the approach that we are on.
Okay, well, as we speak, by the way, ICICI, Prudential and HDFC Life, both of them well and truly in the green, so really good going. Keep those stocks on your radar. So insurance is looking okay. From amongst the large cap space, banks are looking fine, financials at large. Cipla is the top gainer. Sun Pharma follows suit, so pharma rally continues. The ones which are lagging are Power Grid and NTPC. Not surprised there. There's some flattish move in ITC and HUL, so do watch out for those two. Bajaj Finance, Bharti Airtel looking slightly flattish in trade today as well. So that is the other thing. Chakri, one final question before we wrap up this conversation. It may become a stock specific question simply because there are only two players. But if somebody doesn't want to buy a Reliance Industries because of the run-up that the stock has shown, can you still play telecom in India? Would you believe that Bharti Airtel still gives you a viable, good value from an investment perspective? From a really long-term perspective, the stock may well dip from where we are right now.
On a separate note, and since you mentioned Reliance Industries, I think Reliance Industries is a buy, even at current levels, simply because the number of avenues of growth that they have. Now, going to Bharti, Bharti still has a huge amount of debt. It's not that it's a super duper healthy company. And a lot of the ARPU increase and data increase that is expected to come about is kind of expected, and for them to move towards break even. The stock has done decently well. And so I would not really be a big buyer of Airtel at current levels.
You want to give us your thesis on Reliance since you believe it's a buy?
I think so, because Reliance Industries have multiple avenues of growth, and the new avenues of growth include not just Geo, but also now the platform, the online platform, which will rope in a huge number of small businesses and which can snowball into a fairly big thing. And WhatsApp also provides payment gateways. Reliance Retail is executing really well. So if you do a sum of parts of all of these various businesses, I think it's clearly a stock which has a lot more upside levels, even left from the current levels.
Okay. Chakri Lokapriya, we'll leave it at that. Thank you so much for taking the time out and speaking to us today at BloombergQuint.
Thank you so much.
And that's a positive note, but the markets are looking rock solid right now. I don't know, just be careful. It's just looking like moving along in a one-line direction. Never mind the pause that we saw in last week's trade. Let's wait and watch. We are around the levels from where people have said that there could be some resistance. So 9350, 9400 is that point that people have said at multiple times is a point of resistance. So just be a bit careful. But banks are looking solid, and if banks contribute and Reliance doesn't buckle down, then you have a perfect combination. So let's wait and watch what happens there. The Bank Nifty 2.25% higher, really strong show. VIX corrects further, 38.45 now, about 1.5% lower. So it's all in favor of the bulls for the time being. Let's see if these gains last. But for now, viewers, thanks for tuning in to Indian Open on BloombergQuint.